All right, it is 12:01 by my watch, so we'll go ahead and get started. First of all, thank you all so much for attending. I appreciate you joining during the lunch break and giving us this time. Hopefully it's going to be a really great and informative session. My name is Andrew Swinny. I'm the head of data and marketing here. I'm not going to be the actual presenter. Before I pass it over to the real experts, I just wanted to do a little bit of housekeeping. First of all, this session is being recorded. We will send out a link to the recording probably tomorrow. So expect that in your email inbox. And as you've already noticed, the microphones and video are disabled, but that doesn't mean that we don't want to hear from you or engage with you. So if you have questions during this session, please just go ahead and put them in the chat. I'll be watching that. I'll be grabbing those questions. And at the end of the presentation, we'll make sure we have plenty of time to talk through those. So any feedback, thoughts, questions, reactions, I know our team's going to want to hear them. So please feel free to put those in the chat. All right, without further ado, I'm going to pass it over to the real experts. So I'm going to pass it over to our head of residential lending, Sean. Sean, do you want to go ahead and introduce yourself?
Hey, everybody. Welcome. Good afternoon. Thank you for joining us. Excited to host this webinar. We know how difficult it is out there in this market, and wanted to invite our partners and our friends to join us so we can kind of share and go through an overview of how we're thinking at Leader and some of the strategies that and initiatives that we're focusing on from a corporate perspective to create programs and products that are really helping you and your clients to be able to win offers, sell more houses in this brutally competitive market. My name is Sean Valentin. I am the head of residential lending at Leader Bank. I'm joined today by Patrick Sylvester, our senior vice president in charge of capital markets, as well as Alex Clark, who is our head of operations. We're excited to be putting this on. And again, thank you all for joining us. So today we're going to focus on kind of a run through of, from a high level, of who we are as a bank at Leader, what we're seeing in this market and the feedback we're getting from our partners and from our loan officers in the field, and kind of what we're focusing on as a lender partner to you to offer solutions for the specific pain points that are being caused by the tightness in this market. We're going to talk through these two fantastic programs that we have rolled out that are truly making an impact in the market. The success stories that we're getting back are really great. And we're extremely proud of how we just set up the new Move and Improve line that we're going to announce and talk through to be a kind of a potential option for paying the buyer agent commission once the NAR settlement changes roll out in July. So let's jump in. About Leader first. So we are a $4.5 billion bank based in Arlington, Mass. For the past decade, we have been the #1 purchase lending bank in the state of Massachusetts. Massachusetts, as you all know, is widely known as being one of, if not the most competitive markets in the country from not only a lending perspective, but from a housing perspective. It's a very, very competitive market. And so we closed just under $2 billion in residential purchase loans in 2023. We pride ourselves on having one of the highest production per loan officer in the country. We have a loan officer team of about 58 loan officers, and all very high producing, very seasoned professionals. And we're very proud about that. Purchase lending is at the core of our bank. So the founder, Sushil Tuli, had a mortgage company prior to starting the bank in 2002. And this is kind of our core, has always been around purchase lending and residential lending. Being a bank and having this fixation on residential lending has allowed us to and empowered us to be able to build several other services around the real estate transaction that truly differentiates us. It makes us more versatile than our competitors. And we're kind of using these synergies to our advantage in order to be able to create a true real estate focused one-stop shop for you and as agents and for our clients. It's going really well. And this is kind of a good example of some of the stuff that we're doing around it. The Massachusetts housing market is brutally competitive. It has been for the last 3 years. I feel like we've kind of settled in a bit to the reality of where we're at, but it does feel like it continues to get tighter. And so as we start another spring in this with a lot of demand and low supply, we wanted to kind of talk through what's happening in the market, what we're seeing. Patrick is going to talk through some of the housing numbers, the rate climate, and the economics behind the market. in a minute. But the reality is really that there's no easy answer to this pickle. Interest rates are below 3, or I'm sorry, the sellers who would love to sell are in their houses. They'd love to cash out and take because the values are up. But the interest rate that they have is below 3%. And where would they go anyways? Even if they did sell the house, it's so hard to find a house to be able to buy, and they'd wind up paying more for that house. So it doesn't really make sense, and it's kind of, they're locked in. So I know we're preaching to the choir when we talk about high demand. You're seeing it every weekend at open houses. It's through the roof. Every open house is teeming with people. Crazy competitive. Interest rates are at decade highs. Really no reason to come down with inflation. And inflation at the same time is making everything else more expensive at the grocery store and in everything that we're purchasing. So buyers really need our help. And it's important that we work together as a team, as lenders, as real estate agents, to be able to offer them whatever type of support we can. So to kind of frame this, Patrick, do you want to dig into some numbers as far as the economics go to paint the picture?
Yeah, definitely. Thanks, Sean. And thanks everyone for joining us. It's a tough market out there right now. We really value your partnership and trust, and our goal is to use the resources of Leader Bank to deliver value to you, our partners, and our joint clients. So yeah, we know there's not enough homes out there on the market to match buyer demand right now. So the chart, Sean, you want to move ahead to the next slide here? Yeah. So the chart on the bottom here shows total home for sale inventory this year compared to last year. This year's in the green, last year's in the blue. Clearly this is, you can see the green bars are trailing all of the blue bars in each of these three graphs. This is March, February, and January, comparing this year to last year for single family and condo listings. So why is inventory low? As Sean mentioned, sellers are hesitant to move and give up their low rates. A huge chunk of the mortgages out there were refinanced during the pandemic and are at those historic lows of around 3% or even lower. And giving up that rate and getting a similar size loan at today's rate is going to cost a lot more, about 58% more in terms of monthly payment. So it's a difficult proposition for sellers to give that up and move to a new home. So since the start of 2022, we've seen new single family listings in Massachusetts lower each month on a year-over-year basis for 24 of the last 27 months. So that's huge. Inventory is just declining and declining. Last year's new listings were 20% lower than the year prior. And as of the end of March, single family homes currently for sale are 28% lower than they were a year ago. The good news a little bit, new listings are starting to pick up this year, but still not quite enough to meet buyer demand. And in addition to the challenges of low inventory and finding a home for buyers, higher interest rates are also a challenge right now in the current environment. So looking at the next slide, the trend of interest rates over time here. We can see obviously, rates were super low during the pandemic. There was an influx of pandemic stimulus cash flow fueling consumer demand, and that coupled with the pandemic global supply chain issues really drove inflation really hard, and inflation hit around multi-decade highs around 9% in 2022. So since then, we know the Fed has been combating that high inflation by increasing interest rates to slow the economy. And we're coming out of that, mortgage rates have shifted along with the Fed increasing rates. So we've seen, rates for 30-year fixed loans around 3% during the pandemic are shifting up to highs of nearly 8% last fall. As we got towards the end of last year, expectations shifted for Fed rate cuts coming this year, and that drove mortgage rates down in the last couple months of last year, down to around 6.5% to finish the year. Kicking off this year, inflation has remained stubborn and has delayed any Fed cuts, and rate expectations have shifted once again around that higher for longer mantra and have pushed 30-year fixed rates up to around 7% right now. So affordability is certainly a challenge, with the rising home prices and rising interest rates. Comparing to 2 years ago, March 2022, a median home price in Massachusetts was 550,000. Interest rates were around 4%. Pull forward to this year, March 2024, median home prices are up about 10% from there, and interest rates have risen as well to, as I said, around 7%. So monthly mortgage payment for that same home compared to 2 years ago is going to be about 54% higher in the current environment than it was 2 years ago. And on top of that, it's difficult for our first-time home buyers to save up down payment in the environment where rents are rising also at about 15% each year. So given the challenges of low inventory, interest rates, and affordability, purchase execution for you and your clients is vitally important.
Okay, so what's our strategy here? So given that the market's tight, we know demand is high, we know that inventory is low, interest rates are high. This market requires speed and certainty. It requires a consistent execution from us as industry professionals. Everybody in the transaction, the whole team, lenders, buyer agents, seller agents, attorneys, our collective clients need options. And so we've created 2 programs that touch on these specific pain points in the market. One is our Purchase Pass program, which we rolled out about 1.5 years ago. It's on fire right now. The success stories that we're getting from the market around how this product is really helping people to win houses is amazing. And the other one is our new Move and Improve line, which we rolled out about 3 weeks ago. Again, a pretty exciting program where we are excited about how these programs are specifically impacting the market, today's market, and what we're dealing with. So before we jump into the overview of the different programs, what are we trying to solve for here? Aside from finding a house and having this low inventory for buyers, what else are the main pain points that they're feeling on a day-to-day basis, and how can we help as a lender? So I think one, confidence is crucial. Buyers and agents need to be able to show the listing agent that they're confident in the financing, right? Especially in a multiple bid situation, sellers want a sure thing. They want to know that you're bringing confidence that this deal is going to close, the financing is going to be there. They need something better, some way to stand out from the crowd. What aside from price really helps an offer to stand out in a bidding war? What's different about your pre-approval versus the stack of pre-approvals that the listing agent is going through with the seller, aside from just a brand? They also need flexibility, right? Flexibility to close fast if needed, longer if not necessarily needed. When you're competing, you need to be able to show the listing agent and the seller that you have the ability to be flexible. Whatever the seller needs, you can accommodate. So at times, sometimes turn times or when you are able to close can be more important than price. Sellers are in the driver's seat, so we want to be able to accommodate whatever they'd like. You need solutions and options and at least guidance for if an appraised value comes in low. It happens with bidding wars, super competitive, purchase prices are getting driven up, and at times the appraisal will come in low. Having confidence ahead of time to kind of know what that means and how it will be handled is vital. And then lastly, buyers need access to funds. The whole process is super expensive. The down payment, the closing costs, moving costs, repairs, everything. And clients being able to have access to some additional funds after closing is really important. And that's why they're talking to a bank to get financing. So with these 2 programs, the Move and Improve line and the Purchase Pass, I think we've hit on a lot of these really important pieces of the problems and have provided options and some solutions. So Alex, you want to talk us through the Purchase Pass?
Sure, great. Thank you, Sean. Hello, everyone. Really excited to kind of talk to these programs, not just like high level how they work, what the features are associated with them, but really kind of dig in some of the differentiators that we've seen, especially with the Move and Improve. This is recently deployed to the market and just really getting some great feedback, as Sean mentioned. How our borrowers, our LOs, our partners out there in the market are really deploying these and where we're seeing success to get leg up on the competition. So I'll start with the Purchase Pass. As Sean mentioned, we rolled this out initially about 1.5 years ago. In its first iteration, it was just the fully underwritten commitment letter, which wasn't totally uncommon to the market. What's really been exciting is just seeing all the enhancements in the features we've added onto it since. We really feel like we're in a great position now. I'm really proud of the product as it stands today, and Sean mentioned earlier, we're really seeing a huge uptick in utilization this spring, especially. So just kind of get some stats around it. Roughly about 50% of all of our pre-approval activity is flowing through this program, which is a really large number. So a quick overview of how it works. The first point here, it's pretty self-explanatory, but it's also the most important. And it's just the clarification that this is a full commitment to lend. We're treating these purchase pass loans as if it was a live loan with the property identified. We're fully disclosing the loans to the borrowers. We're collecting all the credit documents. It's going through processing. It's going through underwriting. So that when that end commitment letter, purchase pass commitment letter is issued, it's really meant to look and feel and smell like a standard commitment that we'd issue on a live transaction. And just with all the reputational branding that we have behind these commitment letters in the market, just from the years of being so purchase centric and out there, we've really seen a lot of demand for it. It's really gone above and beyond just borrowers or even LOs asking for it. We've kind of reached that second tier now of listing agents, selling attorneys, all now they've seen a couple of these cross their desks. Now they all want these for any offers that they're entertaining. So just been a great program. Obviously, we're doing the full credit underwriting and we're issuing these commitments really just subject to collateral related conditions, appraisal, purchase and sale contract, condo docs, etc. So kind of due to the fact that a lot of this underwriting process is being front loaded, estimated 80 to 90% of this process is already complete. So we're able to offer this second tier here, which is this 10-day guarantee closing. I mean, we really realize that this is often not necessarily needed. Even if we have a hungry borrower who's out there who wants to close in 10 days, we're actually getting more feedback that the sellers aren't always ready for that. So it's great to have, it's there if ever needed, but really what we're trying to solve for here is to put this pre-approval up against a cash offer. We're obviously timeliness and nimbleness to close quickly really becomes a more of a significant factor. And, we don't want an offer with financing required versus a cash offer, and that knee jerk is, wow, financing is going to take 45, 60 days. There could be delays. We wanted to even the playing field as much as possible between those two offers. So great feature to have. We're not seeing a ton of it, but it's great to see that it's available if needed. Kind of third tier which is one of the more recent additions to our purchase pass program, is to kind of solve for the collateral side. Obviously, the purchase pass in general really shows the borrower's creditworthiness. Their income, assets, credit are all in line. There's not going to be any issues there, but clearly they haven't identified a property yet. So there's still some what ifs or unknowns there. So what the appraisal protection program is, it basically offers a 5% buffer, in case the value doesn't come into purchase price. Obviously, that's a really relevant topic now with the overbiddings that we've seen, and not only give peace of mind to our borrower that they're covered, but also to the seller side too, that if it does not come in exactly to what they agreed to on the purchase price, there's a more streamlined solution there than kind of going back to the table and renegotiating. So we offer this up to 80% LTVs. So with a 5% buffer, we as the lender will cover any associated mortgage insurance costs on that on our dime. So beauty here is it's no cost to the borrower. It doesn't impact their rate or terms on their first mortgage. We will cover that. We keep the deal on track and get it closed in a timely manner. We actually just had a really interesting success story last week, and pretty similar scenario to what I just described. It was an 80% loan to value loan. It came in about 82 due to a low value, and our borrower called us panicked. They forgot that this was included in their purchase pass. Fortunately, they were a client there, and not only that, put their mind immediately at ease. The follow-ups that we had from some of the referral agents on the listing side and the seller's attorney, where they had seen the low value come in low and they were prepared to go back to the table and negotiate. And when we said, nope, it's all set, no additional action needed. It was a really interesting, just like to give that borrower peace of mind, but obviously have that spreading through to the sell side and the various partners that we're working with. And lastly here, this is really testament. Obviously, we are a bank. We offer several other products outside of residential lending, and with the kind of spirit of purchase pass to kind of approach and get in front of these potential home buyers earlier in the process, to educate them, to arm them with all these tools to kind of navigate this competitive market. Why not give them access to our high yielding savings account, which is exclusive to our residential lending customers only. That rate is currently at 6%, so obviously very top of market around here. I haven't really seen much higher, if at all. So a lot of these borrowers already have the bulk, if not all their down payments already saved up. So why not allow them to move it into a higher yielding account to maximize that return as they're taking a month, 2 months, 3 months out there while they're shopping for their house. So as you can see, I mean, it's really come a long way in the last year, especially, and there's a lot of benefits here. And the best part about all this is this is all completely free to borrowers. You know, we're not collecting any upfront deposits or upfront costs to cover us in the event it never converts to a live deal. So it's really a commitment by Leader Bank and us operationally to devote cost and underwriting capacity to support this program. But to see the kind of early upward trends and see how the traction and how it's taken off is really making us double down on it, in fact. So there's really no reason not to have all borrowers go through that. That's certainly our goal, is to have 100% of our borrowers go through Purchase Pass. Really pleased to kind of see the early numbers trending in that direction as well. So the second, thank you, Sean. So the second product, which Sean mentioned, is really fresh to the market. You know, I think about 3 weeks ago, we launched this. It's called our Move and Improve line. This is a product, obviously we're a bank, we write a lot of HELOCs. It's something we're very comfortable for. We're not brokering these out. We keep everything in-house. So we're trying to think of ways of how we can kind of leverage that little bit uniqueness there. So we've been brainstorming this for upwards almost a year now. We really just feel like it's a great time to launch it with this spring market. So what this is, it's basically, it's a free HELOC that we are, for certain borrowers that meet certain loan parameters, we're offering them no charge to them. It's up to 5% of the sales price or value, or 50,000, which is ever less. It can be applied to any LTV up to 80%. So if you do want to take the HELOC, we'll go as far as up to 85% on your combined loan to value. And it's at an attractive rate of just prime for life. What we're trying to solve for here is, you know, not only to give access to funds, but, you know, so many times we would close a purchase transaction 4, 5, 6 months down the line, the borrowers were returning us to get a HELOC. You know, they want to fund a project. They're homeowners now, and they have a variety of costs that are rising up, and how can they tap into their equity? And certainly we would accommodate those, but it's almost, you're starting the whole process over. You're reapplying, getting all new docs because all your docs from the purchase have expired, and it just, you know, it can just be a lot more, you know, headaches involved in that. So the whole point here, and part of the beauty of this program, is to really, there's really no extra lift from the borrower. We're underwriting these side by side and simultaneously to the first mortgage that we already have in process. So we have all their documentation. All we really ask of the borrower is that they sign an extra set of disclosures if they choose to opt in. So very streamlined, you know, not a lot of extra lifting on the borrower side, which is great. And it's just there to have as of the day of closing. Other beauty of that is there's zero impact of adding on this HELOC to your first interest rate or terms of that first loan. A little caveat is there, despite setting up the HELOC and approving it and closing it on the day of your purchase, you cannot draw on that HELOC on that day. That enables us to kind of keep all those other terms intact. But you can't have access to these funds within days of closing after that. And our since we're HELOC, we're keeping all these on our balance sheet. All the servicing and retail aspects of it are contained in-house. You know, we will reach out to those borrowers within days of closings to set all those up, help them facilitate a draw, and give them that kind of immediate access to these funds. So when we're designing the product, kind of went over this a little bit, but you know, what we had in mind when we came up was the obvious. I mean, you know, when you purchase a house, obviously you're putting a lot of your cash reserves into that down payment. So the idea of tapping into equity to reimburse you for moving expenses or new furniture, appliances, TVs, you know, minor home renovations, or, you know, if you got an inspection on your house and there was things you're aware of now that you want to get, you know, fixed up, you know, punch list items, this would be great usage of this. But just for clarification, you know, this really can be used for anything. There's no restrictions. It's just a general HELOC that's there. It's at a great interest rate of prime. So it can be used for a number of different projects outside of your home, even. And interesting enough, as Sean referenced earlier, you know, the NAR settlement proposal kind of came through at the end of the design process, but, you know, immediately kind of came to the forefront here of, wow, this could be a great way to tap into to help borrowers who are potentially on the hook for some of their commission costs now. So I'll kind of kick back to Sean now after, and he can kind of elaborate on that a little bit more.
Thanks, Alex. Yeah, so as Alex mentioned, as we were kind of constructing and thinking through the Move and Improve line, the National Association of Realtors settlement proposal was announced back in March, and it kind of struck us as this was kind of a perfect use case for being able to help in that situation with being able to allow buyers to be able to pay their buyer agent. So we're working on putting a tri-party agreement in place that'll allow direct disbursement to a buyer agent or a buyer agency brokerage directly out of the Move and Improve line after closing. It'll be set up during the loan process, and then will be dispersed directly to the agent after closing. I think it's a huge differentiator. Again, like Alex said, I mean, the fact that we're able to do our own home equity lines of credit and be able to put together some of these different types of programs is a real differentiator for us. Regarding the settlement in general, from a lender perspective, as your partners, our goal is to provide options for you. We want to give you guidance, regardless of what the commission agreement winds up being. As you know, with having the commissions being decoupled from the MLS, there's going to be a lot of different types of scenarios that can come out of that. We want you as agents to negotiate the purchase given the unique scenario and whatever's best to help get your client and our client the house, and then we'll figure out the best way to structure the payment of that and be able to potentially help the buyer tap into some of the equity through the Move and Improve line if they're going to be paying it, or be able to structure the seller credit and that kind of thing. I think regarding the commissions, regardless of the amount of what they're going to be, there's really only three ways that we can think of that we're seeing them being paid, right? It's going to be paid by the seller, it'll be paid by the buyer, or some combination there of both. If it's paid by the seller, then there'll be a seller credit issued. Seller concessions for commission have recently been excluded from Fannie and Freddie Mac's interested party caps. So seller credits will work well in that situation. Our jumbo investors and some of our community bank partners will most likely have a few additional overlays there. But by the time it starts to come up in July, August, we'll have guidance from them and be able to, our loan officers will be able to guide you on that. If the buyer will be paying, then we'll either issue a payment directly on the CD, or in the case of qualified Move and Improve line, we can set things up during the transaction and disperse after closing via wire or ACH. Something to note, we're still waiting for them to rule. Currently, VA restricts a buyer from paying any type of commission, but I'm sure the industry will have guidance on that prior to July, August. I think the point of this whole thing is just regardless of how it works out with the settlement, with commissions, with the industry in general, we have your back. We have a team of amazing loan officers. We're going to be more than happy to help you structure this and guide you on options as it comes through. Anytime there's changes in the industry and it shakes things up, as it did with TRID for lenders, work as committed partners, we will work through it together. We expect this to be no different. We support each other. We'll do what's best for clients, and everything else will kind of fall into place. So that's the presentation. Would love to answer questions and talk through anything else that's on your minds.
All right. I don't see any questions so far in the chat. I do have one, which is, can these programs be used together?
Again, absolutely. If there's no other questions, we recorded this. We'll send it out. Oh, did we get one?
Yeah, it's just saying thanks from Christine. Thank you. Thanks for coming.
All right. Thank you all.
Awesome.
Appreciate it.
Great. You all. Yeah. We'll end this here. We'll send out a recording, expecting your email. We're also going to include a very small survey in that email. It's important to us to make sure that we're evolving these products to meet the needs that you guys have. So if you have any feedback, we'd really appreciate it. We're also going to be inviting you to participate in future focus groups. So if you're interested in that and you want to help shape some of the stuff that we're doing, let us know. You can reply back, answer in the survey, or again, just let your loan officer know. I'll be happy to set that up for you. Thank you all.
Excellent. Thank you.